and help preserve your family's financial future. Now, here's Gary.
Happy Wednesday. Welcome to the Word on Wealth. Have you ever wondered, is it a good idea to look on Zillow to find a house? Is that going to get you the right value? Is it going to be too high, too low? Is it a bad idea? We're going to be talking about that with our expert, Ken Pecus, the founder of the Pecus Group. He's also a good friend of mine and a friend of my family. Has been my personal real estate person. And for members of my family, he's done a great job for us. So that's why I get to be on the air with Ken. He's on the Word on Wealth, and he's here today because it's Wednesday. He's back from his explorations of around the world. So welcome back, Ken.
Thank you. I think I get to say I get to be on here because I'm the lucky one here. So I'm excited.
Oh, this is just
so
I just do want to say this as kind of an FYI. I just thought it was very interesting that I am texting you and you're in Spain and I'm going, Ken, you're on your vacation. No. It's okay. It's okay. You can text me. I'm going, no, I don't want you to respond. I want you to say, Gary, I'll be back next week. But you responded. So you're just awesome.
It's kind of cool. Kind of feel international doing a radio show from Spain. Wasn't that cool?
Very, very cool. I just loved it. That was super good. So you guys, the way we do this is we have Ken on the air and he's here we're literally going all the way to the top of the hour with Ken. So to get in your question to him, you need to call now. It's 888-344-1170. Call and get your questions in so that Ken can answer them on the air. Okay, so what we've done is the feature that we have really enjoyed in the last, doing this thing is we want to find out from Ken, and tell me what order you want to do it, because I want to do the high-low comparisons, and then I want like market report, and then I want to talk to you about interesting Zillow experience that one of my kids had. You want to start out with the new feature?
Yeah, let's do it.
All right.
Although now it's an existing feature, not new anymore.
Existing.
But
okay.
Let's see. I've been gone out of San Diego, but San Diego keeps churning. Actually, while I was gone, I closed a bunch of deals. We put another, my team itself also put a whole bunch on the market. So I would say overall August has been pretty brisk, much brisker than traditional August when it kind of slows down.
Interesting.
But now for this last week, the lowest sale was a manufactured home. I know that surprises everybody, but get this, it was in Valley Center. It was 2-bedroom, and it sold for $36,000. So you can literally buy a manufactured home for $36,000 in Valley Center. And so that was pretty awesome. And then the lowest sale house was over in Mount Laguna, but you're going to love this one too. It closed for $189,000.
What?
It was, 189, 2-bedroom, 1.5 bath, 968 square feet. But here's the cool key thing. Essentially it's a, super cool cabin, but it came with 20 acres.
Oh my gosh.
So if you really wanted to be away from people and have a lot of room between you and the rest of the world, seems like that might have been an ideal spot.
Wow.
And I know. And on the opposite side, so the cheapest condo was in Escondido, a 1-bedroom, 1-bath, 700 square foot house. Condo, but it closed for $315,000, which, hey, for Escondido, it was East Escondido, the 92027 zip code. There's 3 of them up there. And, but 315. So seems like Escondido is holding its own against, some of the more central neighborhoods.
Yes.
If that's, that's the cheapest condo up there.
Yeah, that's wild.
And so there you go. Those are the cheapest or most affordable, I should say.
Okay.
I don't like the word cheapest. The highest price one. This is a doozy. It was in the Covenant in Rancho Santa Fe. Ready for this? 7 bedrooms, 6 bathrooms, 3 half bathrooms, 6 car garage, 18 parking spaces, on 3 acres, just under 9,000 square feet. It was a cash sale, as most of these are, and it closed for $16,750,000. Gotta love that. And guess what? There were 2 other sales in the 8 digits in San Diego. So it wasn't even that was not even an outlier. There was another one, but they were like at 11 and 13 million. So They didn't make the number, but 16 million, almost 17 million. How's that? Them apples.
Whew.
Seems like things
Wow.
are moving, huh?
Yeah. That's, yeah.
So,
See, the thing is, if like on this show, we talk about reality, like what really happens. And if you listen to the news, all you get is like, it's terrifying. Don't do anything. And my son ran into that. My son, Tyler, he's up in Washington. That's why you're not helping him buy his home, but he's up in Washington State, and it's been interesting. He put his house, his agent looks on Zillow, finds a house, they've been shopping, looking for things. And they say, hey, check out this house. This came up on Zillow, tells his agent, this came up. What about that? They go looking at it, fall in love with this house, and they want to put in an offer. I mean, not a lot less than the listing price, but less than listing price. And then they're waiting to hear, and nothing happens. It's just quiet for and the agent saying, I'm trying. They're not responding. I don't know what's going on. They're not responding. The agent's not calling me back. And it went on for days. And so then they get word that the house has been sold. It's in escrow. I mean, that's the first time they heard anything, like 2 weeks after they'd submitted an offer, and find out that that somebody came in and basically offered $18,000 more. And they, quote, took the offer, without coming back to my son and saying, well, what's your bid? Because you just got outbid. Because I mean, they're poised to go like, we would have gone all the way up to the listing price, dude. It was really funny. And so they were really kind of taken back by that. And then he texts me this morning and he said, look what I found on Zillow this morning. It's that house again. And we're talking, they accepted, well, they kind of were outbid 2 weeks ago, and now it's back on Zillow listed. So I want to talk a little bit about the Zillow thing and what is going on from Ken's perspective, because I'm totally confused. You're listening to The Word on Wealth with Gary Quackenbush and Ken Pecus. Ken's number to get a hold of him is 619-977-8419. Call Ken. You can go and explore houses he has for sale, figure out how you can be a real estate owner, a real estate investor. 619-977-8419. His team is awesome. There's nothing better I could say about them. They're fun to deal with. They're energetic. They are enthusiastic about what they do and about serving you. And we'll be back with more on talk a little about Zillow stuff coming up next here on The Word on Wealth.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to The Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is faith-based investing with Anthony Wright.
Most Christian families don't understand this one thing. The money that you're saving for retirement helps fund the abortion industry as well as other liberal anti-family causes. It's the sad, dirty little secret of American investing world. And here's the good news, though. You probably also didn't know that just a few minutes of your time and we'll screen and clean your investments for you. There's no cost, no obligation. Learn the truth about your own investment mix. Then the choice is yours. Remember, the word says when God's money is in the hands of the righteous, the people rejoice. Well, we also are fiduciary investment advisor representatives. That means that our firm makes a pledge to always act in your best interest. Go to BibleSafeInvesting.com. Download a free copy of my book, Faith-Based Investing, or call me at 931-RETIRED. And please don't forget, listen to Faith-Based Investing this weekend right here on Family Talk.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust, so have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQlaw.com, 855-500-TRUST, GQlaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecus and the Pecus Group helped me and my family. They can help you. This is Gary Quackenbush of The Word on Wealth. You hear Ken every week here on The Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecus has completed hundreds of transactions. He manages a powerful team of professionals at the Pecus Group. From single-family attached homes to luxury high-value waterfront properties to apartment buildings, Ken Pecus is ready to help you avoid problems and costly mistakes. Learn more online at kenpecus.com. That's Ken Pecus, Pecus.com. Or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty. You've all helped support MyPillow and their employees in these tough economic times. Mike Lindell knows that.
At GQ Law, 855-500-TRUST. Or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's GQlaw.com. 855-500-TRUST.
All right, we are here with our real estate expert, Ken Pecus. We have him on the line right to the top of the hour. If you want a question, if you want to ask a question of Ken, call right now, 888-344-1170. And I can promise you he's going to be able to answer it because he knows everything. I know that's not an exaggeration, Ken. I just think it is. I think you know everything. Well, I mean, even my wife even sent you an email. Hey, I have this really complicated circumstance and this and that and the other. It has to do with this, this triple net lease on this piece of lease property, blah, blah. And you go, oh yeah, I've done that before. And we were laughing our heads off. She says, I sent this email to Ken asking if he could help with this really complicated situation. He goes, oh yeah, I've done that before. And then her comment was, what has he not done? I just think it's really fun.
Well, I haven't been to Luxembourg or Liechtenstein. How's that?
Geez.
That's still on my plans, but there's a good airline there.
Oh, that's so fun.
All right, let's
talk
I've
about
got
the Zillow
so
thing.
much to talk. Okay, so Zillow.
I kind of want to know, just because Zillow, I mean, it has not even been around that long. It is like the go-to. If I want the value for my home, I put in Zillow, my address, and it gives me this estimate. And Zillow's had its own, sales team and marketing, all these crazy things. And so I want to talk a little bit about that, like your take on the Zillow thing. And then I want to get into the Tyler situation, that weird situation, like ghosted by the seller's agent completely. Why? And then all of a sudden it pops back up on Zillow. It's like, what is that, bad marketing? What's going on?
All right, so I think it's important to understand that we're talking about separate issues here, so they're not interrelated, so that everybody understands that. what's going on with Tyler is really not based on Zillow, and what's doing on Zillow is really not based on what's going on there.
Right.
So let's just talk about Tyler's thing real fast, and then we'll get into Zillow's part, because there's a lot to talk about Zillow, and I think this is a very worthwhile topic, because it is part of everyday life now. So, I think the more information you have on it, the more data you have on it as a consumer, then you have a better knowledge of how you want to use it or not use it, however it is.
Okay.
So what I'm assuming, because when they saw it on Zillow, they went to the agent, that means that property was probably listed on a local MLS up in Washington, and it was syndicated out to the different sites, Zillow being included. So the first thing that happened with submitting an offer, my question was $18,000, would that have been made it a full price offer, or would that $18,000 still have been less than full price, or would that have been over full price?
No, still less.
Curious.
It would have still been less.
Okay.
Yeah.
So I think one of the things that it comes down to the individual agent and the seller and how they play something. So overall, the move that they made was probably a very bad decision at the time. But depending, they being the seller and the agent, most likely the agent, because most of the time the seller is relying on the agent's counsel. And what happens often, let me ask another question about the property. Was the property in maybe a fixer, or was it a completely done property, or what was the nature of the property? What did it look like?
So the situation basically is like it's like early 1960s house built. I think the owners lived there for a really, really, really long time. And now it's being sold by one of the original owners, or one that's been there for decades, and not really, they're just kind of like, don't really want to leave, but they know they need to leave, that type of thing.
Perfect. So what makes me think that now, so I'm purely projecting here. I'm just conjecting, I should say.
No, that's fine.
But,
that's what we want.
Yeah. Often a house like this is an ideal, especially if it was built in the 60s, it's an ideal flip home that you would see on the flipper shows, fix and flip or whatever, that type of thing, because built in the 60s and 50s, they're not so old that they're just decrepit and falling down. Usually they were fairly solid, and they were in general very, very simple floor plans that you can't mess with the architecture. So they lend a lot of attraction to people to come in and flip, make them, today's HGTV modern, super cool. I can make it whatever, and get out the door. And there's a lot of flippers that can do this. And one of the things that you see as a real estate agent is you're constantly being called by these kind of people. And they say, hey, if I can get that property, you can represent me, and you can make double the commission, or this or that. And they make it a benefit to the agent, or they try to make it a benefit to the agent to try to get them in. But if you're representing a seller as a listing agent, your first and foremost duty, your fiduciary duty, is to the seller and who you're representing. And what, in my personal opinion, my personal practice, is that if I'm representing a seller, whether a flipper wants to come in and write an offer through myself or somebody on my team, that's great, but that's not going to be at the expense of the seller not having themselves, getting the highest and best value. And generally, if you get an offer that comes in and the difference between those offers is 18,000 or less, there's no way I would be telling that seller to not either counter or multiple counter unless the seller is making that choice, because the flipper's offer is all cash. I'll close it in 4 days. I'll let you stay there for 3 months. And no matter what the other buyer's offer is going to do, they can't do, it's not going to beat the flipper's offer.
Got it.
But it's bad practice for the agent not to acknowledge the offer, not to acknowledge, and not to stay where it stands. It's just bad practice, because if you're going to be in this business a long time as agents, you're only as good as your last deal, and you're only as good as your reputation. And so you just treat every agent, even if they're not going to ultimately get the property, you should treat every agent very respectfully, that client very respectfully. And now that it's shown back up on Zillow, my guess is that deal didn't go, and it's available still.
Mhm.
And the fact that they see it again on Zillow versus the agent calling Tyler's agent and saying, "Hey, the deal didn't go. Is your client interested?" Just kind of shows me that whoever is representing that seller is maybe not the brightest bulb in the lamp or the chandelier or the candelabra. I don't know. I mean,
Yeah.
I'm just they should be rethinking that. And so I don't think that it's anything to do with Zillow. They're just indicating out what's going on with whatever the MLS is showing.
Yeah.
Zillow should not be showing something different.
Yeah. And that's the thing that, to me, I mean, I run my own business and they know it is. I mean, getting back to people is really important. And if something falls through, you go back to the person and say, "Hey, did you, you made that offer? Are you still thinking about that? Or can you offer a little bit more?" And but I've seen you and your team do that constantly. It's like this back and forth. There's this communication. It's like just constantly this stream of communication back and forth. And it really was really upsetting that it just died, because Tyler's sitting there going, I mean, do I not get an opportunity to come back and say, I'll give more, that type of thing. So it was just very interesting. And that it came back up today. So his agent's back on it again, contacting the seller again. Yeah. And I the circumstances are weird. A lot of the houses they're finding are estate sales up in that area. These houses that are, built in the early 60s, and then the owners are passing away, or one of them is passing away and the other one has to move or whatever. So that's what they're finding up there, which is very interesting, because they're houses that just there's not been a lot done to them. They're well kept. They're just super dated, which is wonderful. That's,
Which is exactly what a remodeler wants. It's exactly that kind of well kept but super dated, because those are the easiest houses to acquire the biggest profits on a flip. Those houses are just like gold for those people.
Well, and I've been seeing that the houses that my kids have been looking at, when you get into the houses built into the 60s, they're solid. I mean, they're solidly built, and they have different, stuff done. My daughter bought a house that was built in the 80s, and there's a lot more like internal, like inside elevation, like different wall shapes and all that. It's not boxy like the houses now are very, very boxy, tall, super boxy. So it's just interesting that, I don't know, the whole housing market is interesting. I don't know, the way you guys keep, tabs on things and, knowing the highs and lows. I just think it's fascinating. So that's why I love being able to do this show. So thanks for your comments on the Tyler situation. It's to be continued. So that'll be interesting.
Well, tell him and his agent to be bulldogs. Just keep going after it. And if they don't get satisfaction through the agent, go to the broker directly. Assuming it's not the broker and the agent the same person, but go to the broker of the office and say, "Look, we're not getting whatever," and make the broker aware. And you don't like to take that step, but if you're not getting a communication, you need to just take things into your own hands and go contact them.
Okay.
That type of thing.
Yeah, that just makes sense. I mean, if somebody on my team here is not, the client's not happy, they go, I want to talk to Gary. I want to talk to the owner of the company. It's like, you're entitled to that. Sure. And then usually I'm like, talk to the team member and go, what's going on?
Exactly.
Like
let's how you handle it.
Yeah. Excellent. I appreciate that. Thank you. Insider info here. Okay, talk to me about, let's see. So, and then Zillow in general. So we want to talk about, first of all, let me say, you guys that are listening, I'm with Ken Pecus here on the Word on Wealth. Ken is the founder of the Pecus Group at eXp Realty. He does buying and selling homes, everything from, whether it's going to be, a waterfront property to commercial properties, single family homes, rentals, multi-units. That's all that's totally within the area of expertise that Ken functions within here in Southern California. And his number is 619-977-8419. And he has never hesitated with anybody I've referred to him to meet with them and say, what are your needs? What is your plan? What are your thoughts? Just early in the process of, can we get you into a home? can we get you into rental? What do you need? He even analyzes like, well, what do you need financially? Like how much per month are you looking at? And how do we get into that? And what's our plan? That's the kind of guy we're talking about. That's why he's part of the Word on Wealth. We are going to take a quick break, bottom of the hour. When we come back, we're going to go right to the top of the hour. So get your questions ready to call us up. We're going to be talking next a little bit more about Zillow and kind of some of the kind of the ins and outs with that and how that functions. And I'm always super excited about this, is that there's some economic and Fed news that we need to talk about, because we're headed into the fourth quarter coming up, and it's going to be interesting to see fourth quarter next year. And we'll get Ken's take on that, his expertise, kind of the inside look. We're going in through his ears to look in his brain and figure out what Ken thinks is going to happen fourth quarter and first quarter of next year. You're listening to the Word on Wealth. If you want any help from me, you know my number, 855-500-TRUST, 855-500-TRUST. We'll be back in just a moment.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. Law.com. Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST, gqlaw.com.
You're listening to the Word on Wealth. We got Ken Pecus. He's our real estate expert. 619-977-8419 is actually his cell phone. And I know it works because I called him while he was in Spain, and he answered his phone. So he loves what he does. And I love the fact that he loves what he does. Pretty cool. Okay. So Ken, there are different automated sites to figure out what your house is worth. You know, what's my house worth.com. What do you think my house worth is.org, Zillow to get your Z estimate. And then they've got Redfin does it. And then you start typing in on some websites and they go, click here, and they go, okay, an agent will call you soon. Like, that's not what I wanted. Can you talk about some of the automated sites? I'd just love to hear your take.
All right, so automate. So you actually just touched on important stuff. So it depends on which site it is. So there are some sites that will you'll type in your thinking and get an automated number, and it's like AI is so smart it'll do this now and figure it out, and then it's tied to a real estate company that'll do it. So it's important to know who, what, where. The biggest elephant in the room right now is Zillow. And Zillow, where does Zillow come from? I think it's important to understand a little bit about Zillow and who they are. Okay, so I'm going to give you like a quick couple-minute background on Zillow, so you just have this, so you know where they're coming from. One of the founders of Zillow, the main founder, the most vocal one, is Rich Barton. And if you don't know Rich Barton, he also founded Expedia. He also founded Glassdoor. Okay, so some people out there that are with LinkedIn or big corporate companies, you might understand Glassdoor. It's a place that you get a lot of corporate information from, and employee satisfaction, different things. So Zillow Rich Barton founded Zillow in the same mindset of Expedia, and with the intention, I believe, to do to the real estate industry what Expedia did to the travel industry. So Expedia is worth more. I haven't checked like lately, but it was worth more than every American, Delta, United, every airline combined for a while, capitalization. Expedia was worth more than Hyatt, Marriott, whatever. Yet Expedia didn't have a single hotel room. They didn't own a single hotel room. They didn't own a single rental car. They didn't own a single airplane, but they were worth more than all these companies because they convinced all the companies to let them be an aggregator of their data and to do a second and third party site. Very similar to what Amazon has done with Amazon Marketplace.
Yes.
So now fast forward all these years, but the one company that didn't do it, Southwest Airlines. One big company. There's a number of other ones, but Southwest would not let their stuff go on Expedia. You have to go to Southwest. So all these other airlines and hotels and whatever, they're very much dependent on a company like Expedia and Hotel because they've already gone that devil direction and they're dependent on so much of their income coming from that route. Barton did the same thing. He decided to, if we can do it there, real estate, this is just a numbers game. We'll just put it out there. We'll get all the data. People will come in, and that's how he created Zillow. Get people to use it, and so he got real estate agents effectively to give them all this information for free because that's where all these MLSs sync into the Zillow site. And then what they do is they sell the leads back to the real estate agents that gave the real estate information to them in the first place. It's a brilliant business model if you think about it.
Yeah.
And that's where they make money. And then where Zillow went wrong is they decided that they could do it as a real estate company, and they started with Zillow offers and everything. And you saw how that imploded in the last 4 or 5 years because you cannot, and they admitted it, you cannot rely. Zillow was having to rely on its own Zestimates of properties. And guess what? As soon as they started to rely on their own Zestimate of properties, their freaking business model imploded because they got stuck with a bunch of property that had bad valuations to start out with.
Interesting.
And so
yeah,
it's kind of funny. So,
but now they're called Open
Door,
Door, right?
Well, Open Door is a different company.
Okay.
So they work with Zillow now. So you have Open Door. Yeah. You have a bunch of different, cash buying companies. So here's what I think people should understand. A house is different than a standardized commodity. So I can have 1,000 blue Toyota Corollas or something like that, right? It's coming off of manufacturing plant. Is this one better than the other one? No, they're not. They're all made to spec. And unless you got one that was a lemon, they all perform exactly the same way. So you can value out a 2019 blue Corolla with 35,000 miles or whatever. You can kind of give it a generalized price point. With a house, unless you live in a completely Edward Scissorhands cookie cutter neighborhood, it's very hard to do. So what happens is, because everybody has the different styles, they buy houses and then they make changes. They change the color, they change the paint, they change the windows. And sometimes the house is oriented to the south, to the north, to the east, to the southwest. Sometimes the trees grow really, really big. Sometimes the yard is not quite as big enough. And it's virtually impossible if you're an agent out there, or if you've gone and bought or sold a house recently, to realize that in the vast majority of homes out there, and even in condos, it's very difficult to commoditize the value of those. So when you go to get a Zestimate or whatever, what they're taking into account is the basics that they can take into account, but they're not taking into account what the home really is like. It might have been brand new, but it could have been some horrible garish taste.
Mhm.
Would that really sell for that? No, it might have been all brand new, but it all had to be gutted. And Zillow can't take that into account. Neither can any of these other online aggregators. So that's why you have to be, it doesn't hurt if you want to go check a Zestimate, if
Mhm.
you want to go do whatever. Redfin is actually better, because Redfin is actually a real estate company with real estate agents that actually, I'm not sure how their model works, but I know their business model is based on giving out a lot of data to people and then getting people to call in to set up appointments, because they offer low commission rates to list the property, but they take the full commissions minus maybe some credits when they sell the property, and that's where they make their money. It's another interesting business model, but once again, it's based on bulk. It's not based on the totally close-in knowledge of what an individual agent who's skilled and knowledgeable about that neighborhood, about that house, about that community can actually tell you what the value is.
That's so
So-
interesting. I love it. You guys, we've got lines open. If you've got questions for Ken, you can call us at 888-344-1170. Get in your question to Ken. We're going to go to the top of the hour, and we do have lines open, 888-344-1170, and ask me your question. So I agree with you. I've known some agents that were, that dealt with Redfin. It was very interesting, their whole different model. I mean, there's all kinds of ways to do this. And I just, in the being around real property, buy, sell, and all that for like virtually my whole entire life, I've never been comfortable with anything other than talking to an agent that is well seasoned, that knew what they're doing, that had really a tremendous support team like you guys, because like you're saying with houses, it's so interesting. You get somebody that wants to sell their house, and they say, well, gosh, if I were going to buy this house, I'd probably want a new kitchen. We'd probably want new bathrooms. The carpet looks old. And now you took the furniture out and go, oh my gosh, this carpet looks like garbage. We're going to replace the carpet. We're going to repaint the walls. And they end up spending all this money, and they sell it. And the person that comes in and buys it goes, this carpet is awful. We don't like these colors. And then they strip it and do it all over again. But it's, I don't know. Housing is just really interesting. And I've never heard it described like you did. Everybody has their own style, and it depends on their own emotions. And so they're buying based on that and what they can foresee. And I see that. I mean, the house that we're in now, I walked in and my brain immediately goes, okay, I don't like I don't like the 16 feet of mirrors on the side wall. I want a walk-in closet, so I can do that. I can move that door there. I can do that. I can move the vent here. I can do that. And that's why I'm walking through a house, kind of like, what is Gary going to be able to do to tweak this to make it like I really like it? It's kind of funny. And
like Harry wants it.
it's like, this is the way Gary wants it. And I don't care what, we just redid this. It's like, well, it looks stupid. I want it some other way. So I love it. Oh my goodness. Okay.
And people try to commoditize things.
Yes.
And there's a time and a place for that. But in real estate sales, with all the emotions and with all the different styles and tastes,
Mhm.
it's just not an effective way to create value.
All right. I love it. Love this advice. Hey, what we're going to do, you guys, when we're going to take a quick break and we come back, we're going to open the lines up again. So you can ask, if you want to get on hold now during the break, it's 888-344-1170. We've got some economic news and Fed news, and we can never do a show without getting Ken's opinion on this. We want to pick his brain about what are things looking like in the fourth quarter? What are they looking like in the first quarter of next year? We want to get into Ken's brain. So coming up next, we're picking Ken's brain here on the Word on Wealth. We'll be back in just a moment. Do not touch that dial.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We are here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. One thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do audit reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. gqlaw.com. 855-500-TRUST. gqlaw.com.
Oil investments involve a high
Loan. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855-500-TRUST.
All right. You have got the Word on Wealth. You're listening here every day. We are here Monday through Friday. Same time, same station. It's 2:00 on KPRZ and KCBQ. 2 FM stations, 2 AM stations, just to provide you all this information. And you are fortunate enough to be listening along on Wednesday, which is when we have Ken Pecus, our real estate expert, with us. If you have questions about real estate and you want to call the show, do it. If you want to call after the show, Ken has an excellent team. I highly recommend 619-977-8419. And it's not just like, okay, I want to buy a house, I'm going to call Ken, or I want to sell my house, I'm going to call Ken. We've been talking, and if you're a follower of the show, you can see what we're doing. Sometimes it's a matter of, I've inherited some money, or I've saved up some money, and I want to have a retirement plan. I want to figure out, with real estate in Southern California, because it's the bomb, what could I do to become a person that has regular monthly income from real estate? That's Ken's baby. You sit down and figure out what your monthly needs are, what you're looking at, and come up with a plan on with how much money you're starting with, how to get to that ultimate goal to where you can get safely into retirement and have income. Now, you usually hear about stuff like that with a financial planner, where, how much money in the stocks and bonds and mutual funds and what mix you have and what's your risk tolerance and all that stuff. But you'll be astounded in talking to Ken about that, because his perspective is coming from real estate. And I know he's personally helped my brother really get into this incredible real estate empire where he doesn't have to worry about anything for the rest of his life because he's been connected with Ken and the way they set up this real estate stuff they got going on. It's fantastic. I mean, some people do it with financial planners. Some people do it with guys like Ken. And, that's what this show is all about. Give yourself options. We're in Southern California, man. We are in San Diego, and I don't know how to say it other than if you've ever lived here in San Diego. I don't know if you've ever even over a 5-year run, have you ever seen houses go down and stay down for like more than a year or two? I mean, I sold my first house at the very tippy top of the market. I was so proud of myself. And then Cheryl and I went, oh gosh, that means we have to buy it this at the top of the market because it was our home. And we did. And we thought, oh my gosh, market took a dive. We thought, oh no, we've lost, $200,000 in the last 6 months, which what? We're living in the house. Who cares what it's worth, right? But yeah, it came back at least 100%. It's like 200% more than when we bought it. It's like way more. But the thing is, it's being patient. Anyway, all right. So Ken is going to talk to us about some of the economic and Fed news, the fourth quarter, first quarter. So what's that looking like? Or what's your, give us the scoop now.
Cool. Well, I appreciate you allowing me to talk about this because I think especially if you're looking to buy or sell, I think if you understand or if you kind of are looking out at the overall market, you can make a better decision. Once again, it's always going to be, and I'll keep saying it, more data gives you a better place to make decisions from because you're the one making the decision. So a couple things yesterday, and I think this is significant only because, Philip Jefferson yesterday was overwhelmingly approved by the Senate, confirmed by the Senate as the Fed number 2, because the current number 2, the previous number 2, Lil Brainerd, was put in charge of the National Economic Council and went to the White House. So I think this is important because I always look for signs because it was an overwhelming Senate approval as opposed to, now he's already on the board for, and his time period goes till 2036 as a Fed governor. You get to either be Fed chair or number 2. They're 4-year cycles. And he's been a strong proponent of Jerome Powell's position. And so I think what I'm looking at that is that the politics of Congress right now, because that still controls where our world goes, is very much supportive of what's going on with the Fed. So hoping that the Fed is going to do something different or change taxes, whatever, doesn't seem like there's a lot of political appetite for that, despite in our very, very strange political world. So as wealth builders, I think you should look at that and realize that this is probably going to be the economics that are going to move forward, at least in the short term. Okay. So that's number 1. Number 2, you need to understand that consumer spending accelerated over the summer. Everybody with all the interest rate, all the consumer debt, all the higher whatever, it actually accelerated. In fact, the Fed Bank in Atlanta has, they're doing studies. They did their own study. It's not the main Fed study, and it can go up or down. But the Fed Bank in Atlanta doubled the projected GDP for the U.S. this year, which is kind of crazy from what they were thinking. Maybe not double, maybe just almost doubled. And then the existing U.S. GDP, the official government side of it, they're expecting that to come out later on in September and show that the GDP doubled. This is all while China is going down. So it's telling us something is that this predicted recession, I've been saying it for weeks that, Bank of America lowered their thing, that, JP Morgan lowered the thing. Now Goldman Sachs has lowered theirs to a 15% chance. So if there's going to be a recession, it's going to be very, very small at this stage based on all the showing economic indicators. But what that also means is you've been hearing a lot of people talk about, hey, by the end of this year, interest rates are going to come down. Certainly next year, we're probably going to see some interest rate pullback because of the expected recession. Well, if you don't have if this expected recession doesn't show up, then my guess is they're not going to be pulling back interest rates as fast as some people hope. And so if they're not going to be pulling back interest rates as fast as some people hope, if you're out there sitting on the sidelines waiting for those interest rates to come back, be careful. You could be pricing yourself completely out of the homeowner game where you don't have to. I don't know if that is tracking, but think about it. Think about it this way. We had talked on a previous show
Yes.
about the inverted yield curve and how after 18 months of an inverted yield curve, there's always been a recession. Well, that ends next month. It's October, right? Well, these new numbers just came out. I mean, the Fed looks like they're not going to raise it in September. It looks like the interest rate, it's going to stay there. But with these new consumer spending and GDP numbers, my guess is inflation is not really going to go down anything drastic. And if it's not going to go, if GDP growth keeps growing and it's not going to go down, something significantly in the next, 3 to 6 months, we're probably looking at interest rates that are going to hang where they are, if not go up a little bit more. So people have to just what I'm hoping for is that the inverted yield curve changes, and all of a sudden we're going to be much better set with adjustable rate mortgages, which we don't really have great options right now. They're getting a little bit better, but if interest rates stay high, the adjustable rate mortgages are going to be the way to go with the 5-year fix, the 7-year fix, but they haven't made a big debut on the market yet. They're just starting right now. So looking forward, as you're planning, there's little to no indication of a impending doom still. I mean, I know people want it to be, but there just isn't. And all I do is I look at the world.
Well, and the thing is, Ken, the way you explained it last week, and then it's interesting because you sent me a Instagram post by Barbara Corcoran. Everybody knows her, Shark Tank, super New York real estate mogul. And you said it, and then you sent me this Instagram, and I'm going like, what did Ken tell? Hey, Barbara, you should do an Instagram post on this, because it was like exactly what you said. It's
for months.
Yeah, you just have to change your expectations. And if you're thinking, okay, for $600,000, I'm going to get 4-bedroom, 3-bath, half acre in Poway. It's like, no, people did that, but that was 10 years ago. So don't, and even like in my own little neighborhood, it's like the people down the street, when they bought one of the houses just 5 or 6 houses down from me at literally the recent top of the market. And it was like, we're thinking there's no way it's going to go any higher. They came in, they paid a ton of money for this house. And then we started to look at Zillow values and went, wait a minute, Zillow had their house priced now at what they bought it for, right? And then they had my house, which is actually a lot larger, priced at exactly the same number. I went, okay, there's something weird, just because the algorithm doesn't work with a new purchase, it has to kind of reset. But the thing is, so the guy down the street could be going, dang, Gary and Cheryl bought their house for so much less money and they got a bigger house and whatever. But it's like, it doesn't matter. It's like, this works for me. I don't care what my neighbors paid, or that they've been here for 30 years, or the rates were different or rates were low. It doesn't matter. This is our world. This is what we can afford. And this is good enough. And it is really difficult to look around and go, gosh, they got more house, but it doesn't matter. It's the place you live. And
no.
And I think that's the message that you are sending to our listeners, constantly. It's like, if you want to buy a house, go start looking. If you want to sell your house, do it. Really.
Don't time it.
Exactly.
Don't try to time the market.
No way. It's just not possible. You don't time the real estate market. You don't time the financial market. It's just never going to work for you. There's just no way. Call Ken. You guys, how do you buy a house? Call Ken, 619-977-8419. You want to sell your house? Easy. Go to kenpecus.com, Pecus, kenpecus.com. Great website. Ken, thank you so much for being on the air again. And we'll talk to you next Wednesday. Have a great rest of your day. And thank you, everybody. Love you all. We'll talk to you next week. If you need help, you got our numbers. Come back on the Word on Wealth.
Bye.
Bye.
Attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics.